You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, beaming to you from the lovely Options Insider Studios here in scenic and still summery Chicago. Of course, we are indeed the home for all of your favorite options, content, audio, website, wherever you like to find it. Of course, you can go on the web, find it at the mothership, the flagship, theoptionsinsider.com. Or if you're just looking for the radio, of course, we have it on the website. We also have it iTunes, TuneIn, Stitcher, pretty much anywhere you like to find your favorite podcast programs. Were available, of course, also via our mobile app, available for iOS, Android, and the Fire OS. No shortage of ways for you guys to check out our great content. And while you're listening, maybe afterwards, you have a question, you have a comment, you love that, you hated that. How does this work? Let us know. We love to hear from you guys. No shortage of ways. You can hit us up on the website, via email, social media. Again, it's all baked into the app as well. So no shortage of ways for you guys to track us down and share your opinions. And joining me on the old Volatility Views program, my volatility partner in crime, and he's certainly quite guilty this week, I think we all are, Mr. Mark Sebastian, the greasy meatball himself, beaming in from his many stops here on the old Options Insider Radio Network, as well as from a little place he likes to call the Option Pit. Mr. Greasy Meatball, welcome back to the Volatility Views program.
Hey, great to be here. Been a heck of a couple of weeks, huh? So really a heck of an 8 days, if you will.
I go away on vacation last week, and first off, you and Bill filled in ably, so thank you.
Yeah, that was an interesting day. We were basically talking at the onset of this entire mess. And, we were both I think, tossing back and forth whether there was some real teeth to it. And the answer was yes.
Yes, a resounding yes.
There is teeth.
There were some very, very sharp canines about to dig in. Yeah, but I go away for a week on vacation. You guys proceed to break the market without me. So the message, I guess, here is either, depending on which side of the market you're on and which side of the vol you're on, either I should go away more or I should never leave again. I'm not sure which way that works out. And of course, I come back this week and you broke it even more. So it's crazy town this week. Lots to sink into, lots to talk about. So I think without further ado, let's dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is the portion of the program where we break down the week that was from a volatility trading and analysis perspective. And What a week it was. Listeners, we are recording this on Friday, August 28th, right around noon central here. So the session is still unfolding before us. Most of the major indices today, certainly compared to the rest of the week, pretty much unched on the day. Vol creeping up a little bit. We'll get to that in a little bit. But if you just looked close to this moment right now, last Friday to today, so a week, you would see we're about roughly the same level in the SPX. You would think, wow, what a quiet week. What a quiet summer week we had in the marketplace. And man, you could not be further from the truth if you somehow were under a rock. Let's say you're just tuning into this episode. You were on the beach in Tahiti all week, didn't really pay attention. It was quite the rock'em sock'em week in the old markets. As Mark alluded to, they were doing the show last week, and it was just starting to really kick off there. We didn't really know what was in store for us this week. Came back in on Monday, and the markets were off to the races, or down to the races, I suppose, depending on how you were looking at it, with the market opening up, S&P pretty much down about 100 handles. Dow down over 1,000 points, the biggest one-day point drop in its history of that index. A lot of people certainly not knowing really what was going on. Seemed like the really bottom had fallen out of the market. China was in free fall. We were in free fall. It was looking like the worst of times for the bulls out there. Things were getting so wild, so wide. Market makers clearly were widening out on the open. No one knew where anything was. SPX and everything else were triple width, and people were probably quoting even wider than that. Of course, when things get that wide, it makes it hard to disseminate some of the indices that are based on those values. So all the people out there who like to just throw around VIX Cash like it's some readily available, tradable product kind of had a bit of cold water thrown in their face on Monday morning when that vanished. That went away. For about a half an hour on the morning there was no concept of where the VIX actually was because they just couldn't get reliable quotes enough to really disseminate the product. It wasn't until about 10 a.m. in the morning that it finally opened up quite literally in that sense when it opened up to about 53 and a quarter or so to get into percent realm, nearly a doubling, a 90% move. That was the highest level it has reached for those of you playing the VIX historical game since January of 2009. So to put it in a frame of reference here, that's right in the tail end, of course, of the big 08 meltdown, 08 financial crisis. So those are some pretty historic levels. Also, just to put it in context for a bit too, we always talk about on this show about all these crazy bets we see going up in products like VIX calls, people buying 75 strike calls in February and things like that. Just think about it for a minute. All the people who are always writing in, what does it take to move VIX here or there? We saw the world was ending on Monday morning, and it got up to 53. And it didn't stay there for very long. So that should kind of give you some frame of reference for what it really takes to get up to these levels. And people who throw around levels like 40 and 50 like it's nothing, those are actually catastrophic levels of volatility. And so just bear that in mind when we're talking about these things here. Of course, other big names were exhibiting a lot of volatility in the marketplace. An index unto itself, Apple, just got the wind knocked out of it, hit down to 92, sold off all the way down to 92 even, actually, which is an odd level, but you saw a lot of support there clearly because Apple rebounded, and from there the rest of the market started to rebound as well. We talked a lot this week, actually. Apple 75 puts were trading vigorously for around $1 for a while there, including about 25,000. May have been the firm actually selling. It was one of the vol harvesting trades of the week. A lot of people writing in about that one. That was a very, very popular one. Of course, that was hard to get because the very next day they eroded to nothing. I think they're trading about 7 cents right now, but still a lot of people were up in arms about that trade. There's a lot more to get into, but first, before I keep going, Mark, I want to get your thoughts on this week. Clearly a very active, very volatile, pun intended, week in the marketplace. What's really caught your eye this week? What's been lighting up your chat room over there, and what's really been your tale of this week?
I mean, I think the realized volatility is really the key with everything. The VIX gets to 53, stays above 40. Now it's been stubbornly over 25 for multiple days, and you have really just across the board volatility being super firm. So like here we are today, we're down $2.50. VIX is up. VIX futures are moving hard today. Right now, you've got basically every month, you've got September up 90 cents, but you also have Akinova up 90 cents. The whole curve is moving flatly right now. Even DEES is outperforming September right now. So there's some really screwy things going on in the volatility complex. But yeah, you've got wind at VXX is back. You have all sorts of market fear now priced in the market, along with just crazy realized volatility. And realized volatility, how much the S&P is moving, was, over the last 8 days, had to have been, if you look, we were moving 2 to 3% a day. I mean, realized volatility last 8 days probably north of 40%. So
yeah, actually, at this moment, it is hovering the 10-day realized just south of 40 at 38. So yeah, it's pretty aggressive.
That still includes last Monday and Tuesday when things didn't move. I mean, think about this. It's been since last Wednesday up to today that we didn't move 1% in a day, and on that day we were down 17. So it has been a heck of a couple of days of moving.
Yeah, today with just a slightly down day in the market, only down for actually 0.25% or so in the S&P. It seems like nothing. Our frame of reference, once again, is very, very near term, and once again, it has been distorted to all heck by these crazy 1+% moves pretty much every day. And of course, we talked about Monday. Monday did indeed rebound off of that. Tuesday, we saw an attempt at a rally, and then it faded aggressively toward the end of the day, turned into a rout, turned into a sell-off. Then we saw Wednesday and Thursday back in rally mode. Today, it seems like the market is kind of searching for direction, not really found anything definitive. I said selling off slightly on the day. We are seeing a little bit of vol out there creeping back into the marketplace, like we said. 10-day realized 38, but as Mark said, that includes a couple sessions that weren't exactly wham bam. You cut that down probably like 7-day realized, and it's north of 40. 30-day implied out there hovering, and realized actually both hovering about a 23, which is interesting. Talking about one of our favorite indicators out there, the old VVIX. Of course, the volatility of VIX kind of shows you if things are rocking and rolling. If you couldn't figure it out for yourself in the underlying and the rest of the markets, VVIX will point you in that direction. And we were talking before about how it was hovering in the 80s, got up to 90s. It was pretty active. It got up to, in the height of the terror, in the height of the madness, the panic, the sell-off back on Monday. It spiked up to 212. Those are historic levels out there in VVIX land. And as we speak right now, at the tail end of this very heady week, it is hovering right around about a 127 or so. So still markedly elevated off of those already elevated 80 to 90 point levels we were seeing just a week ago or so. So yeah, things are just are still very much a crazy town out there, to use a technical term. And you were talking about the futures, Mark. You're right, it is kind of a weird, almost bifurcated term structure we're seeing out there. Of course, things are backward as all hell towards the front of the curve. That's kind of what you expect, given things are just so much in flux in the near term right now. But as you mentioned, there's some funky things going out in the farther portion of the term structure as well, which is not what you typically see in an event like this. So it does kind of show that there is a bit of confusion out there, perhaps a bit of a disarray, a bit of difference of opinion as to what exactly is floating. And I think to boil it all down into a nutshell, nothing really is screaming to me, and maybe you concur, but nothing really yet to me is screaming to me from a volatility perspective that the worst is behind us. There may indeed be more rocking and rolling to come. Would you concur?
Yes. I believe that is entirely possible.
Yeah, it doesn't seem like, and it's not like we've sold off to the 19 level again or something.
Everything is pricing itself like, the way risk is pricing itself is there is a lot more to this story. And if anybody thinks that losing 100 and, call it, let's see, we lost 40, then 66, then 70, then 25. So we lost, about 200 points in 4 days. Then we made back 110 in 2 days. If anybody thinks that's healthy, it's not. It makes me think that maybe this is a W type, where you have a W formation, not a V bottom. And there could be a lot to this story. I think this China situation is developing, and, it's just it's a fluid situation. I mean, look, the VIX and RVX are right on top of each other. Russell's been the well-behaved child out of this group. NASDAQ things are rolling around. We saw Apple get down to like $90 a share at one point in time. Now it's back to 112. Just all sorts of things getting slammed pretty consistently, and it's again, it's just kind of shocking seeing how these financial markets are behaving.
Yes, talking about going back to the VIX futures for a second is kind of interesting, Mark, because they did just launch this very, very near-term product, the VIX weekly futures. Kind of everyone and their mother has been waiting for a short duration, kind of nearer-term, bite-size, call it what you will, smaller, nearer term type vol products. We did launch it finally. We've talked a bit about how it hasn't really hit its stride yet for a variety of reasons. They're putting out a lot of data out of the SIBO, trying to thump this thing and saying, hey, look how much more the weekly futures are moving than even the monthly. So if you want bang for your buck, here it is. And yet, looking at the data, this is some of the more, I had this from Friday, so this is about a week ago. I'm sure the tail is still that way today. Looking at the August 22nd volume in the VIX futures. VIX futures did a very robust day last Friday, not even taking into account this week, doing over 600,000 contracts. Yet when you parse those numbers down, lion's share of that was, of course, back in the front month, September contract, doing 360,000 contracts, then 121,000 in the OCT contract, and then about 50,000 each in Ovendies, and then some other scattered paper. You're getting up to over 500,000 already. And you look at the weeklies, the front weekly, the second, third week, they did about 1,000 and about 500 respectively each out there, and then about 96 in one of the weeks. So yeah, still not lighting it up. I think we've discussed it before. Some of it is structural. People, like we mentioned when we had the Typhon guys on the live show, they were not able to trade the product yet because I think they go through IB. They mentioned, and IB hadn't set them up yet, or hadn't set up the infrastructure to do it yet. So that part of it is structural, but still part of it, you'd think the people who could trade it, if there was a week that would incent you to trade some nearer portions of the curve where things are rocking and rolling, this would be it. And yet, so far at least, not getting the love. Does that surprise you at all?
I think especially in a market like this, the P&L volatility that would be associated with that, it would be so hard to speculate with and so hard to trade against anything but in really, really near-term positions. And so, as I look, I'm not entirely surprised that that's the way it moved. I think that this is a case where the options will immediately add to the liquidity because people are going to want to trade the weekly options as a way of not getting completely slammed on these things, but being able to trade them. I think this is one where we're going to know that the egg is the options themselves and the chicken is the volume increase in the weeklies.
Yeah, I'm certainly looking forward to that day as well, because as we've seen many times, options do still drive a lot of the other volume out there, and certainly for a lot of our audience out there, even ones going into the active high-end retail, they tend to overwhelmingly prefer the options in the future. So I think you're right. Once the options list, that will kind of set everything else off. Those are indeed coming in early October for all of you writing in, still asking when they come in. That's when they're coming. We talked about it before. But yeah, you got another month or so to wait. So fortunately, not going to be ready in time for all of this rocking and roll. And speaking of rocking and roll, I mentioned about the difference in the weeklies versus the regular, even monthly contracts. These numbers again from last week, so they don't have this week factored in. But looking at the weekly futures out there in VIX land, they gapped up about 70% for the settlement through Friday, whereas a standard monthly contract at the time had about 3 or so weeks left. That was only up about 30%. So you're talking over 2x percentage-wise move at least. So again, if you're into things that are rocking and rolling, that front portion of the curve is certainly where the action is. Speaking of rocking and rolling, looking at things from a historic perspective, some other interesting numbers. Again, we don't have this week's number concluded yet because this week is not done. So we'll look at it through last week. That was indeed the biggest percentage move we ever saw, net for a calendar week out there in VIX land, 118.5%. The number 2 week right behind that would be back in May of 2010. with about an 85%. And, of course, D's of this past year, 2014 with 78%. March 2007 with 75%. You got to go all the way down to the bottom of the list, number 5, to find a 2008 date. In particular, October 10th of 2008. Everyone knows that was a rocking and rolling period. Was still only a 55% move. Again, there's a lot baked into this number. We talked before about the contextual nature of volatility. VIX, of course, was at a relatively lower level when all this stuff started rocking and rolling, so it was easier for it to do a 100% or so move than it would be if the VIX was trading 25 or 30 or something like that. So bear all that in mind, but still, it is interesting to see that we are indeed hovering at relatively historic levels. Looking at, we always talk about the upside bias of VIX when it comes to upside movements, of course, downside in the underlying. And when it looks at the biggest down moves, they're not even close. The biggest down move we had for a week in the VIX product actually was Jan of 2013 with about nearly a 40% down move. So again, well off the biggest upside spike we've seen in a week. So again, feeding fuel to the people out there who always say, oh, VIX is so biased to upside when it comes to volatility moving to the upside. And again, the numbers bearing that out. Moving on to some other interesting products. Well, I guess before we get into some other realms, any other takeaways that really kind of surprised you or caught your eye this week, Mark? And what indeed was the furor, the hubbub over there in your pit chat? What was catching the eyes of all the traders floating around in there?
There was a couple of huge VIX option trades that went up in the form of our 1x2 guy finally cashing in, and another guy doing a 1x2 the opposite way. So some really interesting trades going up into kind of midweek that I believe Monday and Tuesday that are just kind of fascinating the way things moved. It looks like as we're speaking, the market is starting to fall apart a little bit here, but it's just some fascinating option trades that caught my eye. And again, one other thing, oil. We're looking at now a nice $5-6 handle rally in oil, and yet the oil VIX is actually rallying. It's back up to 50, which I thought was not something we were going to see. So there's some movement there. The only thing that's moving around where we're not seeing any volatility at all is gold, which apparently nobody cares about anymore ever again.
It had that one big move, and that was about it. But yeah, you're right. That's a good point, talking about our 1x2 friend, because we've been talking about him for a while. He's been rolling pretty much the entire summer at this point. And listeners, if you guys remember, he would typically sell something nearer to the money and then buy two of a farther out of the money call. Again, that's a trade that's poised to do quite well on explosive upside days in the VIX, kind of like what we saw this week. So our friend has been rolling and steadily biding his time out there, and it seems like it finally paid off for him. Again, we don't know. We assume he had something else on out there, so perhaps that didn't work out as well in his favor. But the hedge side, this side, the option side certainly did, and he took that off. I kind of wonder if this will be the end for him, Mark, if he made his money and he's going home, or if perhaps he will try again next month, because it has indeed been so lucrative. What do you think?
It's really fascinating. Not only did he unwind, and he made some good money. He paid a dime, sold it at $1.05 and $1.60. So he did real well on that trade. But then somebody came in and actually did the opposite trade in November. They did the 2026 1x2, buying one, selling two. And they did that for a decent credit as well. Right now, that trade is working in their face, but just really kind of fascinating the big, huge trades that have been going up in that name.
Someone saying, I see you, Mr. 1x2 swap, and I'm putting it on the other way for size.
Yeah, that's something you typically see when vol is really high and people are playing mean reversion. But, we haven't seen that trade traded heavily since 2011. This is the first spike that maybe gave you an opportunity to do that trade. And, what people like about that trade is they can generally do something that's in the money against cash fix and sell something that is out of the money against or at the money against cash fix and take a decent credit. And, that's kind of because of where the future is. And, that was kind of what we saw, which was kind of fascinating.
I can certainly see the impetus why someone would maybe prompted to do that ratio upside trade the other way of our 1x2 friend, because it certainly, I'm sure, looks attractive right now, selling a lot of that really, really juicy VIX upside. But that is also a deeply, deeply dangerous trade. Particularly in this environment, you and I were just talking, it doesn't seem like the worst is behind us. Indeed, there may be worse to come. If we do have, like you were talking about, the W-shaped type event, that 1x2 to the upside that's going to leave a mark. So hopefully our friend has something else on somewhere, perhaps a catastrophe call somewhere, or the VIX future, something like that. So should the worst come to pass, he's got something, because it would not be outside of the realm of possibility for us to gap back up into some crazy levels, 30s, 40s, who knows, maybe even retest that crazy 50 handle again if the bottom falls out of this market. So I salute our friend for having some serious cojones, but that may indeed work out not too well for him.
Yeah, I mean, if things are bad, he's going to have all sorts of problems. If things get really hairy, I mean, November is going to take a while, so he's got some time, but he could have some serious issues if this thing really does blow up.
I mean, you and I have said it before, we kind of tend to favor the other way our 1x2 friend was doing it. It kind of hurt a little bit in the near term, where kind of VIX kind of vacillated a little bit and didn't really do much. He may have taken a few, nothing big, no drubbing, but he may take a little bit of a hit on that. But now he paved his way, he bided his time well until this time when he was able to take it off. I think we have some listener mail later about taking off some of these calls, so perhaps we'll table that discussion until then. But yeah, a lot of people have been writing in and asking, and I know we've been watching as well, saying, hey, how's this 1x2 swap guy doing? And we were all kind of waiting for this kind of moment to see how that would work out, and now he finally got his moment. Good to see that he got a chance to unwind it. Sometimes these things happen, like it happened briefly in July. We had that brief flirtation with the 20 handle, or was it August? I forget. And I think it was the end of July, and with July cycle anyway, from a trading perspective. And no one really had an opportunity to take anything off because we only gapped briefly into the 20 handle. Now we had a sustained move to the upside, and it certainly was a lot easier to take some of those profits off the table. And good to see that happening, because otherwise people don't get to come back and play again when they forget to take their winners off the table. So yeah, will be interesting to see how this week stacks up when it's all concluded from a net and, of course, historical perspective against last week, which was indeed a rock'em sock'em week as well. Just really quickly before we get on to the crude, which I want to hit on as well, other products out there in vol land, we're always maligning this VIX up, VIX down product, not really delivering what it says, et cetera, et cetera. It also, a rising tide lifts all boats, and it certainly lifted this one this week as well. It had been doing somewhere in, the 20 to 40,000 shares, not contracts, listeners, shares range on a regular basis for quite a while. Yeah, it's been hovering in the 20th, actually less than that a lot, 6,000 some days in VIX up. And then on Monday, of course, like everything else spiking, volatility related, doing about 813,000 shares. So pretty sizable volume out there. VIX down also doing it, the VXDN doing about 650,000 on that day. So getting a one-day blip. It's already kind of come back to normal, it seems like, doing about 350,000 on the Tuesday, and then kind of just falling off a cliff, 70,000, 50,000, 25,000 so far today. So interesting stuff. Not really going to change our perspective, I don't think, on this product, but at least it got a little bit of love on Monday. Mark, does that surprise you that people will be flocking in? Or I guess on a day like Monday, people are looking to put on and take off vol pretty much anywhere they can and take what they can get?
Although that product did not perform very well. But yeah, I mean, it was definitely a decent thing for them, but I'm not sure they've been able to prove their use case with this. Unlike, like I said, the VIX futures, those weeklies really did prove some use case, which is pretty spectacular. And so yeah, I was at a minimum, I think that they've got an issue in that they didn't get. I mean, those things are $1 now, both of them, and so they've got their issues.
Yeah, I'm looking at it while we're talking here, and I mean the volume numbers are impressive. But yeah, if you were going into that product for some sort of net vol capturing the breadth of the vol move we were seeing, which this is ostensibly supposed to capture spot VIX. I guess if you look at it from a low to high, it did about double. So that kind of is what VIX did. But it went from a low of 190 to a high of 420, but it opened at 320. So it really only gapped up $1 intraday, and we knew VIX had more of a high than that. But yeah, it's kind of hard to really. And now you said you're right. It is. They both are hovering sub $2, $1.50 in the VXUP range. It's kind of hard to see the big bang for the buck being delivered in these things that were designed ostensibly to deliver spot VIX to you in a very easily tradable, securitized package. And I guess you can argue net to net if you go low to high, it kind of did that. But yeah, I think there's a lot to be said for another product on a day like Monday. Speaking of other products, let's move on then. You touched on it earlier, Mark. Crude time. We have been kind of gently mocking crude and our friends over at Goldman for picking some aggressive downside, saying vol was underpriced. The vol argument didn't really pan out in their favor, but you could maybe make an argument that the downside net movement in the underlying finally did, because they've been talking for a few months now, beating that drum about crude was heading back south of 40. And on Monday, at least, that prediction came true. We saw most of the major crude products off substantially on Monday, about 5%, hitting 6.5-year lows out there in WTI and or Brent, depending on where you're looking. We also saw the metals getting kind of weak, the shiny stuff and the industrial stuff like copper and aluminum hitting their lowest levels since 2009. Fast forward, of course, to today and into yesterday, at least, where we saw WTI gapping up about 10.5% yesterday, or nearly 4 handles, hitting north of 40 again, settling at NYMEX at about 42.5. The Brent also gapping up about 10%, or another about 450 or so, to close right around 47.5. So we're back over that oh-so-watched 40 level in both contracts, particularly out there in WTI, where 40, I think, is a more watched level even than Brent. And, of course, OVX and OIV, like you mentioned, Mark, both getting signs of life. They had essentially kind of withered away on the vine, again, putting the lie to that conversation that vol was underpriced a few months ago, because all vol has done is come in until this week, where it finally got signs of life again, and with the products gapping all over the place, not exactly surprising. Like I said, as we speak right now, halfway through the session, OVX and OIV both hovering around the 51 range, which is decidedly higher than we've seen them recently. Mark, a lot of rock'em sock'em going on out there in crude land. In addition to the breaths of air flooding into OIV and OVX, what else is catching your eye out there in crude land this past week?
Yeah, I mean, that OVX starting to pick up, the OIV starting to pick up, and you know, a pop in crude oil prices in the last couple of days. You know, the market, you know, we're crude is in much better shape, has recovered much better in the market. You know, we're looking now, and you know, as we're talking, the S&P is off now $10. So kind of the low of the day, but oil is up big, 5% today. So you know that's interesting.
Speaking of other products and interesting, you're right. I was kind of looking while we were chatting about crude as well at what's been cooking, what's been afoot out there in GLD, and yeah, it hasn't really been, and just in gold, the big gold futures in general, and it hasn't really been participating to any great extent in this, shall we say, tumult that is engulfing the market of late. We certainly did see a spike, as you might imagine, on Monday when people are flying to anything they understand, and so gold certainly being among them. But it wasn't perhaps the big move anyone expected, and it pretty quickly eroded and evaporated. And right now, as it's hovering out there in the 108 in the GLD, and of course commensurate levels out there in the futures. Mark, we did an interesting piece on our network a few weeks ago with the chief economist coming out of CME, and he did an interesting write-up, very well timed. He wrote about it, and I think it was about July 15th, so about almost a month ago here, saying essentially that implied in gold was at near historic levels in terms of to the downside, very low. And so it seemed like gold was poised for some sort of move and probably to the downside. Of course, a couple of days after that report came out, gold did indeed sell off very abruptly. A vol spiked out there, I believe, implied went from about a 12 or 13 all the way up to about a 20 just in a couple of days after that report. It was very interesting stuff to talk about some of the structural elements of vol out there in gold and also some of the key support levels and production costs and things that drive a lot of the pricing of gold out there. If you haven't had a chance to listen to that episode, by the way, listeners, it's on our long and short of futures options program, the most recent episode that we produced out there with the CME. Check it out. It's a fascinating discussion and extremely well-timed. Not always do you have an economist coming on the show with such well-timed research, but in this case, it was spot on. But you're right, that was the case about a month ago. A lot of gold a lot of vol coming into gold, I should say. This week, not so much. Moved obviously, but not the precipitous moves we saw out there in crude and others that really seemed to respond to the tumult in the marketplace. I know you're not a big metals guy. Maybe I should reach out to Uncle Mike for something like this. He loves the metals. But did that kind of take you by surprise at all? That gold really not being the big catalyst, the big driver we might have expected this week?
I've never considered gold to be a great investment. I know there are the gold bugs out there. I just think they're wrong, and it's not gold is not the end all be all, and I have trouble coming up with a use case to really own it. As I've said many a times, if you really think the world's going to end, what should you do, Mark? Buy
a shotgun and a samurai sword and meals ready to eat, and then you're ready for the zombie apocalypse.
Yeah, buy bullets.
Or a flamethrower, that'll work too. Of course, then you need the fuel. Then you're dealing with crude again. It all goes back in a vicious cycle. But still, yes, a lot to discuss this week, and I'm sure next week, as all this continues, we'll have a lot to discuss as well. But I want to make sure we get some time for you guys to air your thoughts and opinions on the week that was. So I think without further ado, we'll keep on rolling and have some time to check on the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is indeed the portion of the program where you guys get to join us on the old show with your questions or comments. No shortage of ways for you guys to do just that. Like the man said, hit us up on the website, social media, email, whatever your preference may be. We love to hear from you guys. Let's start off. We were talking earlier about taking calls off. Let's see. We had a question. Here it is. This question comes from Inchan55, historical handle there. He writes, "Hey, was this the week that VIX traders have been waiting for? It seems like they have been buying calls in the 20 strike range all summer with no payoff." Yeah, we've been talking about that. And now we finally got the pop they needed. Will this lead to a flurry of more call buying in the months to come? Well, we kind of just alluded to earlier to our big 1x2 friend who's been waiting ever so patiently pretty much all summer, actually since before the summer. I think he started in April, if I recall correctly. So he's been rolling for many, many months, waiting for this one opportunity, this singular opportunity for the VIX to do its thing, to pop exuberantly to the upside, and for him to have a chance to have those two calls on the upside work aggressively in his favor. Got that this week and took it off. There was so much volume this week. We were talking about it. I think I had it earlier here on the show. We didn't have a chance to get to it, but I'll bring it up really quick. There was a lot of volume this week, so it's kind of hard to parse. A lot of individual trades. Monday, 1.9 million contracts out there in VIX options. Tuesday, 1.3, a relatively light day. Wednesday, 1.8 million, again, nearly pushing the 2 million level. And then Thursday, back down to sub a million, which is interesting. Only 950,000, even though it was a pretty busy day in the underlying as well. And today, day so far as we are proceeding about halfway through the session, only about 421,000. So it seems like we're on pace for similar volume as to yesterday, sub 1 million, unless, of course, the sell-off turns nasty again later in the session. We'll keep an eye on that. So all that to say, there was a lot of volume going up this week, certainly more than an average week, so it's kind of hard to parse all of it. The big trades are obviously easy to see, but there was indeed, if you can intuit from a lot of the paper we saw going up, there were indeed a lot of people finally having an opportunity to unwind these calls. And as you recall, that's something we talked about with the July trade. A lot of people going into the July option cycle were just loading up on fairly aggressive, at least for the time, with the VIX in the low teens, the cash, that loading up on mid to high 20 level calls, if not higher. And that seemed a little bit, shall we say, irrationally exuberant. We had that brief flirtation with the 20 handle and the VIX cash, and that was it. That was the one moment you had in the entire several months, entire summer really, to unwind anything to the upside until, of course, we got to this week. So yeah, this could be the one roll of the dice, the one moment on the craps table. If you're a craps player, everyone's playing whatever, big 6, big 8, the horn, all these ridiculous bets, and someone makes one roll that makes them all look like geniuses. This could be that week. That could be the market equivalent coming up today, where this is the one roll that makes these guys who have been loading up on upside calls look like geniuses. Certainly, if they survive to this point, they've got some money in their pocket after this week. So I would not be surprised to see yet another round of upside call buying out in the SEP range. In fact, if we start parsing the numbers for later this week, we probably have already seen some of that. I'll have to dig into it and see for sure, but it would not surprise me at all. All the call buyers just got all their money for the year, so they're going to be buying more calls again for the foreseeable future. Mr. Sebastian, what do you have to say to our friend here? Mr. Inshan55 wants to know if we're going to be seeing, you think, a lot more upside call love in the VIX in the months to come.
If things keep acting this way, we could see the way out of the money stuff start to heat up. I remember we were doing option block and in 2011, and it was like the Friday before things really got hairy, or the Thursday before things really got hairy, and I bought some 65 calls in VIX. It was like the August VIX 65 calls for a nickel, and then the following week, Mark and you and I were on the same call, and I was selling them at I want to say 65 cents. So, things are crazy when we start seeing that happening. And, VIX, those futures keep rallying. VXX, all those VXX haters, myself among them, right now VXX is showing what it can do when the market moves in its manner. So, yeah, I think there will be call love. And I think that, especially if they're using it to hedge, there'll be some happy players.
As I recall, I think you were roundly mocked for wasting a nickel on those 65 calls, and
yes.
It worked out all right for you that one time. We had to
sunshine on my puppy's butt every now and again.
You're that horn high yo trader on the craps table. It's got to come around once in a while. But yes, I concur. There will indeed be more. That's kind of why we've talked about it before. That's kind of why we like that our 1x2 trader friend, not the one who came in this week buying the one, selling the two, but the one who's usually selling one and buying two, because he's kind of almost structurally kind of playing VIX the right way. You want to be able to stay in the game long enough, manage your table stakes long enough to be in there on a day like this week or a day like Monday when the VIX pops, because that's what the VIX does. That's why you're in the VIX. You're not there for a gentle downside move in the VIX. You want to be in there on the one day when it just dramatically outperforms everything else to the upside. That's what VIX does. That's why VIX in all these long-term studies, if you take out those aberrant days and anything like SPX put versus VIX call, any study you look at, you take out those one or two aberrant days a year or 3 or 4 of them, a VIX dramatically underperforms the SPX put. You're always better off buying the put. But if you factor in the VIX call, and the outperformance on those handful of days, VIX wins, and sometimes wins handily. So it's all a question of being able to stay in the game until you get that moment. And our friend out there in 1x2 land seems to have found a decent way to do just that. So yes, long answer to your question. We do expect a lot more call love in the weeks and indeed months to come. Another question from this week. This comes from Jim J. He writes, hey, question for Volatility Views. This was a crazy week. Yeah, you can say that, Jim. For vol traders, what was the craziest thing that jumped out at you? That's a good one. There was a lot of craziness afoot this week. I think just from the ramifications that it had, and oh my, the sky is falling type of thing, that it really seemed to, which is funny because it didn't really have that effect to me. You know, I was a market maker. I've been down there when these things get wide. That didn't surprise me. But so many people being so shocked that the VIX was essentially off for the beginning of Monday, that they couldn't calculate it, and not being able to wrap their heads around it. And everyone that was kind of the thing that seemed to set a lot of people off, not the sell off in the market, but the fact that there was no VIX. Things are so crazy, they can't even be a VIX. That really seemed to terrify a lot of people. So maybe just for that, and perhaps the reaction to that, I might make that my choice. Mr. Sebastian, what is your choice for the craziest thing that jumped out at you this week?
You know, I think that that 50-point or that 50-point S&P reversal in a 4-minute period was the craziest thing I saw. The other one was Tuesday's sell-off. You know,
which reversal are you referring to? There were so many this week.
Yeah, and the other one was Tuesday. The last 10 minutes of trading on Tuesday, when the S&P flipped from like up 30 to down 25 in a minute. That was just unbelievable.
That was a good one too. I remember we were in the middle of recording our tech show at the time, and we were kind of just joking at the time. It looked like the rally was fading, and we kind of just joked, oh yeah, it'll probably be down on the day by the time down by the end of the time we finished this show. And sure enough, an hour later, I went and checked it, and sure enough, we were down. So that joke quickly came to fruition, and I don't think anyone really thought realistically that it was possible just an hour earlier. And yet, given what we've seen this week, reversals kind of being the name of the game this week, bouncing off those lows on Monday, giving up the gains on Tuesday, and kind of just being in all sorts of crazy vacillation town. So far today, looks like as the show is continuing here, listeners, the sell-off intensifying. We're off over 0.5%, 0.6% now on the S&P. So from unched, looks like we're moving decidedly south here in the S. We'll keep an eye on it as the show keeps going. We got time for, let's see, one more here. This one comes from Jojo. He's just a comment here. I'd say, why is everyone making such a big deal about the sell-off on Monday? Flash crash, market manipulation, that's BS. It's August. Everyone knows the market is thin in August. Does this really come as a surprise to anyone? And I kind of feel your pain there a little bit, Jojo. It was a big move, obviously, but the hand wringing we've seen afterwards has kind of been a little bit surprising to me, because I kind of agree with you. August is traditionally a thin month for markets anyway. We know SPX and VIX and products like this are heavily institutional. A lot of that crowd is in the south of France on the beaches right now. All of the month of August, they're not trading. So we're going to expect to see some wider moves anyway. And of course, you compound that with things like the VIX not being able to run, because there are indeed fewer market makers now out there in the space than there were even back kind of the last time you saw movements like this in 2011. So you fast forward 4 years, fewer players in the space. Regulation has become a factor. Dodd-Frank has squeezed out a lot of the big banks from making markets and providing liquidity in some of these big institutional products. So I think this is going to be kind of par for the course. Not as dramatic of a move as this, obviously, but more dramatic, more sizable intraday moves are probably going to be more par for the course going forward than we have in the past, just because there are fewer players out there, fewer people to stand up and stand in front of that train when it's running you over on Monday morning and saying, I'm going to buy here. So when you have fewer of those, just in general, I think you could see a lot more of this going forward. That said, some of the people, I see what you're talking about with the flash crash, market manipulation. All the stuff I've seen around that seems to have centered around a few ETFs that performed pretty, shall we say, wonkily on Monday. One of them being, I think, the Spider ETF, dividend ETF, which sold off, I think, like a third very quickly, and then gained it all back within a half an hour. And if you look at the underlying components of that ETF, none of them moved anywhere near that dramatically. So there are some questions, I think, with some of these ETFs and how they were performing, and I could see why there may be some hand-wringing over that. Certainly people not happy about that if you got stopped out at the bottom of that Spider dividend. That Spider dividend thing is marketed to grandparents for income. You don't expect a movement like that. So there are some issues with some of the individual products out there, but I kind of concur with you on a broad macro market structure level that I think this is kind of going to be the norm going forward. Mr. Sebastian, what do you have to say to our friend here, Mr. Jojo, who's saying all the furor over Monday is BS?
Yeah, I mean, I think, I think the fact that the liquidity was that bad and that we were able to push markets that way electronically is kind of silly. I think they need to, especially in a market like that, shows why the need for speed breakers exists and why, the NYC should have flipped off the at a certain point should have flipped off the electronics, because that was just nuts. That was silly. That open was dumb and served nobody any purpose and really was not trading. We were trading 10 minutes later. All it did was paralyze the market for 10 minutes. So I think it was just kind of annoying.
I agree. It also, at the end of the day, was a decent selling point for using options in some component in your portfolio, certainly as a hedging tool, because all these people out there who are always saying, well, I don't want to use options, I'm just going to rely on stops. How did that work out for you on Monday?
Yeah, not so hot.
Not too good. So as a selling point for the entire options market, it certainly did indeed do its job. All right, great questions, great comments. Got to keep on rolling into our final segment. It's time for perhaps the scariest segment of the show this week, the time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the program where we prognosticate recklessly and indeed wildly, and certainly, given everything that's happened this week, any sort of prognostication right now is the definition of reckless. Yet we shall proceed forward undaunted. Mark, we were talking earlier about a lot of things out there in the futures and in the VIX products that don't seem to indicate that the worst is behind us, that there may indeed be more going forward. I think rational minds, normal minds looking at this are going to look at this and say probably next week we're going to be lower here in the VIX Cash than we are today, probably maybe in the low 20s, maybe even back in the teens. I'm going to be the irrational mind this week. I'm going to be contrary and throw a wrench in the works and say, you know what? Something else will happen to unfold that will pop us up again higher, maybe even into the low 30s. We'll see. So I'm going to be the contrarian voice here just for the voice of fun and say, you know what? We're going to be higher next week. What say you to that, sir?
About VIX, or you talk about the market?
Talking about VIX Cash. VIX Cash. Yeah, we're talking VIX. It's a vol show.
Right. No, I understand that. Well, if you look at what the vol futures are doing, they are. So right now, as I'm talking to you, November is up over $1, October is over $1, September is up almost $1.40, and the S&P is down about 8. So there is heavy vol future hedging into the weekend, and there is some serious doubts. I feel in the marketplace as to the viability of what we're looking at. That is the way things are pricing themselves.
Are you going to join my mad call for upside then?
I think it's entirely possible. Let's put it that way.
I thought for sure you're going to argue we'd have a nice point counterpoint. C'est la vie, two of us in the crazy realm this week. But that shows kind of how crazy this week has been, listeners. Pretty much anything could happen next week, and certainly the products, at least going into this week, where it's still a relatively mild sell-off. We're already seeing, like I said, it seems like it has ameliorated a little bit, only down 0.4% right now in the S. So it seems like perhaps we'll see. Of course, the day still has several hours to go if the sell-off continues or if it goes back to unched. Either way, there still is, like Mark was alluding to, a pronounced bid to vol, certainly in the near term going into the weekend. So a lot of people doing the literal hedging of weekend risk this week. And so we'll see as this unfolds. Unfortunately, all the time we have for the Crystal Ball segment. It's also all the time we have for this episode of Volatility Views. But before we go, as always, let me check in with my compatriot here, my volatility partner in crime, usually my nemesis today. We're on the same wavelength, the same page, which if that doesn't spook you about the future of the market, I don't know what does. But Mr. Greasy Meatball, what do you have in store for our listeners over there in the land of the pit?
Well, clearly we're going to go straight up from here because you and I just both said vol's going higher. So
exactly.
We're going to actually do a volatility webinar next Thursday. So be on the lookout for that. Check your emails. If you are on our email list, look out for that. And, so we're going to be doing some stuff on volatility and VIX next Thursday. I will have all that posted over the weekend. So keep an eye out for that. Maybe I'll shoot Mark the link and you can go through the show notes and see it and register.
Wow, what made you want to do a volatility week webinar next week? Why would you possibly think of that?
Really odd, right?
I thought for sure you'd be doing, dividend income strategies next week. The perfect timing for that.
that's what we need right now is dividend income strategies.
Yes, exactly. Well, the Spider dividend S&P product isn't working out, so there you go. Perfect timing for a dividend income webinar. All right, check that out over there, optionpit.com to learn more. And on behalf of the Greasy Meatball and indeed myself, hopefully you guys weathered this very, very interesting volatility week. And we'll see you back next week for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. Or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.